Hi, I'm Christy Chumney, a representative of TekCom. I'm going to present TekCom's executive summary introduction. First, I'll begin with the performance review. As you can tell, TekCom was not the big winner, but was a constant competitor. We continuously searched for ways to improve the company, and always invested in the company's future. TekCom did have a bit of financial trouble throughout the simulation, but as previously mentioned, did a great job of investing in the company's future. We got off to a shaky start in human resource management, but were able to turn that mistake around. Our initial thoughts were paying our employees well and giving them plenty of vacation time would be much appreciated, but we found out we also needed to increase the contribution to their pensions as our competitors were doing. During our weekly meetings, of which there were two, the leadership team first focused on performance indicator demand and ill will. We wanted to make sure we had not made our customers or potential customers unhappy. The close second performance indicator reviewed was sales. We as a leadership team tried to ensure we had plenty of products available for our customers, especially since our mishap of beginning the game with only one product. Also, we wanted to make sure our customers liked the products we offered. Now I'm going to turn it over to Oz, who will review TekCom's market strategy.
During our initial strategy discussions, we decided to target the innovators and Mercedes segments. We wanted to reach a smaller target market with a superior product and a larger profit margin. Our analysis of the expected demand figures for these segments confirmed our decision, as the estimated annual potential market revenue for these segments were the highest among all segments. In quarter 2, upon facing resistance from the customer union, who did not approve of us selecting Mercedes as one of our target segments, we had to adjust our interim strategy. We had to build up our brand and products before we could serve the Mercedes segments. So, we focused on the innovators and travelers. Our thinking was that a big portion of travelers could possibly be also customers for Mercedes whom we would approach later. To decide which market to enter first, we aggregated the 12-month potential market revenue for each region. Our findings indicated that North America would be a good market to enter. Furthermore, we wanted to spread our risk and invest in long-term web strategy as well. We decided to open a web center in APAC. In North America, when we launched our product TC, a laptop geared to innovators and travelers, we only got 16% of the market share. Synergy's Graphic Master and PCS Orion took the lion's share. In quarter 5, we introduced a separate product geared just to the innovators, InnoTek. We outperformed Synergy and tied for market leader with PCS and their new product Plutus. Plutus was a slightly superior product than InnoTek. Therefore, we followed PCS and Plutus closely and approved our product rolling out InnoTek Plus. We also invested in our future by devoting funds to improve computing power, as both innovators and Mercedes put a great deal of value on speed. Overall, TekCom was second in the North American market with innovators. In North America, we started off strong with travelers, with the closest competition, the jet setters by the tech titans, creating less than half of the demand that we created. Others were not a factor. We remained in a market leader position and set the standards and price for this segment up to until quarter 8, when Futura-Tech entered the market with lower prices and higher rebates. In APAC, we entered the market slowly with our web sales center, and we were the only firm here until quarter 6. Futura-Tech's entrance to APAC was disruptive to us, as we could not compete with their economies of scale. When Synergy and Futura-Tech offered their products for less than our price, our main strategy was to adjust our prices ever so slightly so we could stay competitive with them but also cover our costs. We enjoyed being a monopoly in APAC with travelers and only faced competition from Futura-Tech in the final 3 quarters. Our products were comparable, However, we had a cost disadvantage, which we could not overcome. We had to make several strategic decisions during the first 2 years of operations. Here's a list of some of our good key strategic decisions. Targeting travelers was a good key decision that served us well, as we enjoyed market leadership with this segment. Keeping our web center in APEC open after Q5 when we incurred losses, and adding salespeople to turn the losses into profits paid off. Fine-tuning our ad campaigns by monitoring the competition and constantly revisiting customer segment needs. Investing in R&D to improve computing power improved our product's perception in the eyes of customers and our investment in the future. Rolling out LuxTech to exclusively market to the Mercedes segment helped us gain sales. Improving web traffic and web productivity helped our web center become profitable in the long run. Adjusting salaries and pension contributions helped us with our human resources management. Investing in sales offices in Toronto and Tokyo helped us remain competitive in North America and APAC. Instead of scrapping older versions, we put rebates on them and sold them, which helped us keep down our losses. Here's a list of some bad decisions we made. At first launch, not targeting each segment with a separate product hurt our demand significantly. In our third quarter, we invested our excess cash in a CD, which caused us to take an emergency loan. Additionally, overestimating demand was one of our major bad key decisions, which caused us to take out emergency loans. Not improving manufacturing and decreasing changeover time caused us inventory shortages and created ill will. When we increased our excess capacity in Q6 with hopes to improve our changeover, our already high excess capacity costs went up even higher. Initially, we overspent in regional ads compared to our competition, which resulted in an inefficient marketing effectiveness. We did not invest much in improving the reliability of our products, which may have given our competitors an edge. While investing in a web center in APEC helped us reap monopolistic profits for several quarters, we also paid for higher shipping costs, which hurt our profit margin.
To start out the simulation, we undertook roles that we felt would both use our talents and challenge our decision-making abilities. We thought that at first these roles would define the decisions we would be making throughout the exercise. We soon found out that our decisions would be better made by using a collaborative effort. We would begin the simulation quarters by individually reviewing the prior quarter's results. We held meetings twice a week via Skype to discuss our efforts. Our Sunday night meetings would be spent discussing the results and trying to figure out the best decisions moving forward. Wednesday night was decision night. We would collectively work through the simulation and have open discussions revolving around each critical decision area. Whether it be marketing, manufacturing, product development, or finance, everyone had a say in the decisions that were made. This allowed us to work well as a team, as everyone felt like their voice was heard. When making our decisions, we would place most of our emphasis on 3 key components. We would review prior quarter results and analyze what we did right and what we did wrong. We would try to improve on our decisions every quarter. Also, in order to keep up with the changing markets, we would analyze what the market trends were and how we could best capture market share on these future estimates. Additionally, we would see what our competition was up to. We would try and see what they did right and what they did poorly. These 3 factors drove many of our decisions.
Hello, my name is Winston Evans III. Today, I will be enlightening you on TekCom's current competitive position, starting with research and development. R&D is valued at TekCom. You know without R&D, it will be very hard to innovate and study how others have succeeded. Moving forward, we will continue to invest in R&D accordingly. Our mission is to be a technological and service leader in the industry. With the digital research, which will then lead to innovation, we are firm believers TekCom will succeed. Sales officers. To date, we have have offices located in North America, in Chicago, and Toronto. We also have an office web team located in Tokyo. Moving forward, we will open sales offices in Europe and look to steal share in those markets. Reallocation. Our goal is to market specifically to Mercedes. With that being said, we will have to reallocate by adjusting our sales, production priorities, and advertise differently. An adjustment with the number of salespeople in our office and web team may also have to be adjusted.
We had several lessons learned throughout our simulation, and one of our biggest lessons learned was to start out with more than just one product. We thought we could create one computer to satisfy both of our target markets, which ended up not panning out well at all. We needed to have one product tailor-made for each of our target markets, which we ended up doing the following quarter after realizing that we were the only company that started with just one product. We also learned that when it comes to human resource management, that paying well and good vacation time just isn't enough. We needed to increase our contribution to our employees' pensions as our competitors were doing. And in the third quarter, we tied up money in a CD thinking that it would be a good investment, when it ended up causing us to take out an emergency loan. If we could redo it, that's something we definitely would have held back on because it wasn't the best strategy. We also initially spent too much money in regional advertising in comparison to our competitors. We could have saved and used a lot of that money for more useful things, and possibly in the long run, having some of that money on hand might have helped us avoid some emergency loans. Another issue was we really didn't invest a whole lot in the reliability of our products. Investing more might have given us a boost over our competition. And I'd say probably our biggest lesson learned was to be more conservative with estimating our demand. Overestimating caused us to take out emergency loans, and it really hurt our company. In our strategy moving forward, we want to continue to adapt and create new products to better serve our current target markets. Our company came out with several new models as the simulation went on so that we could better satisfy our customers in the best way possible. That's something we would want to continue in the future, so we can keep our target markets happy. We also would possibly like to expand to Europe as we become more successful and try and gain some market share there. We definitely want to invest more in market research. At the end, we kind of had to cut back a little to save some money because we had taken out some emergency loans, but we definitely want to put more money in that as time went on. And our ultimate goal would still be to market specifically to Mercedes. It's what our company started out on and what we were slowly working towards, and we would want to continue to try and make that a reality. Overall, we feel we did pretty well and are confident that had the simulation continued, our company would have only grown stronger and we would have continued to learn. Thank you for your time.